Wow, we just bounced off of an incredible long-term trend line yesterday. This is Brian Lewis with MMT Investing, and things just changed. So let me go back to the long-term view, and I'll do like a 2-minute long-term analysis here, and then I'll jump into today's trading. So here we have, well, the S&P index doesn't quite go back far enough to get the bottom of the dot-com bubble, but dot-com bubble, housing bubble blow off, and here we have our first world monetary system contraction, which put us down into the financial crisis. And then we've got our financial crisis bull. This is the best trend line that I could get off of the financial crisis with the most reactions. Um, and then here's our current crash situation. So we started having financial system contractions and volatility back here, 2008, beginning of 2008, and then we had a big one the end of 2008. And this is a consolidation zone. And then we shot out of the top, and then we got our everything bubble blow off top right here. So a lot of people thought that maybe this was the top of the everything bubble. If you've been following the everything bubble, people have been expecting a crash for several years now. A 10-year bull market is a really long bull market. But we got a little bit, and then we got the big one here. And a lot of people thought that maybe we would get a bull trap here. But if you look at the timeline, we've got like about a month drawdown here. This is a 3-month period. This is the whole monetary contraction period here, 3 months. You don't get a bull trap after the contraction's over. It's an expansion after that. If you're going to get a bull trap, you're going to get it here after the first drawdown. So we get a bounce, and this is the bull trap here. That was the bull trap. So this is a pretty textbook drawdown. This is a good one to look at as a model. So you get your drawdown here. The first drawdown is the monetary contraction, and then you bounce out, and then the market will price in what the market looks like after the contraction, and then usually you get 2 bounces. It's like 1 month, 1 month, 1 month. It's usually a 3-month kind of cycle for a drawdown. Sometimes you get like a drawdown and then like it bounces up and up. Sometimes it bounces up and down. The bounces, usually you get 2 bounces. Usually it's somewhere in the 2 to 4 month range for the drawdown. But yeah, most of these cycles are about 3 months. I don't know why that is. Maybe just the way that financial news comes in quarterly affects everything a lot. But yeah, it's usually about 3-month period. So we're about a month in here. Let's take a look at this. So here's our blow off top. And if you come, let's go down to the MACD here. So from here, this is pretty textbook, like smooth descent down. It's not all jagged. It's pretty smooth. You get to a very clear single bottom. A lot of times you'll get like a double or a triple bottom down here, and it gets kind of messy. But this is a very clear single bottom with a clean reversal off. And then it did get a little tricky here because it started to converge early, and this looks like maybe to do with the oil situation, and now it's diverging again. So it looks like we're getting close to a reversal point now. So yeah, let's take a look at this crash. So we got our blow off top here, and then our first bounce here is, I mean, it's right perfect off of this. This is the 2018-2019 bottom for the 2018-2019 drawdown. And then that was our first bounce here, was just like a dead cat bounce right up in here, backtesting that the 2018-2019 trend line. And then we get our crash down here, and then we get resistance that sets up our downtrend line here, and just like wedged right in here and just rallied out of there really hard, and we rallied all the way up and just back tested this 2008 financial crisis bull market trend line just right on the money, bang. Um, so if you were looking for a spot to go short, that was it. But we'll probably get back up in here, and we'll probably get back up here and test it again. So looking at today, I would expect today to be one of the most boring trading days in about a month and a half, because we're just like stuck in the middle of this consolidation zone right now. So I don't know, it's going to go a little bit up or down here. We'll probably test the bottom again, we'll probably test the top again, and then I'm expecting it to gap out either up or down. Um, Probably up. I just feel like there's a lot of bullish sentiment right now, and I feel like it's just gonna like gap out up. But either way, if it gaps up or down, I'm gonna go all in short here and just try to get it. Like I got a short position here. I didn't quite get all the way up. It was like about here uh, 2 days ago, and then I might try to. If it comes back down, I might try to get out some shorts and try to get a better short position up here, because that's what I think is going to happen. But either way, as soon as we break out of this consolidation zone, I'm going all in short. Let's take a look at some scenarios. Well, let's talk about this, I guess. Yeah, so this drawdown here is this is a 31-day initial drawdown here on the monetary contraction. So, I mean, that's a textbook drawdown. I mean, we get the drawdown, we get a dead cat bounce, and then we cross over into a bull trap. So it's 31 days down, which puts the best guess for the first bounce at 31 days. So if we come over here, I mean, right on it. We've got our downtrend line really strongly established here, and we've got our resistance level at the bottom, and they cross right here at 31 days. So this is the only target to me that makes sense. So bang, right there. And then after that, you get another little bull trap, and then the market has to really price in what the market's worth at the end. But best guess is just stick on this downtrend, and then just hit it here again. And this level here is the top of the dot-com and the financial crisis. So I think this is a pretty good target, because it also crosses this exact trend line right on 31 days. I mean, this is like textbook, and it's just like perfect numbers and stuff. It's all set up. It's really weird. So yeah, so here we go down, we cross over into our bull trap, we rally up and backtest the financial crisis. So we should consolidate here and then break out. And there's let's see, a couple of scenarios. So I'm very bearish now, as you can probably tell. So probably the worst case scenario for me now would be if this goes up in here. Markets are about to open. So this is very unlikely, just considering that we're in a huge worldwide monetary contraction right now, and also everything else that's going on with oil and the health situation. I think that is extremely unlikely, and I guess there's like a worst case scenario, which would be to come, like, I don't know, come out of here, just like hit the top of the dot-com bubble and then like go all the way down here to the bottom of the financial crisis or something. But that, like, doing that in one contraction would be ridiculous. That would take several years. Where's delete? Yeah. So I think more likely we get this as a best guess, but I mean, we could draw down to a different level here and maybe bounce off of this, do something like that, where the first dive is a little deeper, or We could go up here and not get a first dive, and we just get a second one. So something like that could happen. But this this looks like what we're doing right now to me. And it seems like people are a bit more bullish than that now. So yeah, so I think we're gonna break out of the top here. Or I don't know, maybe we get here and then we just stay here and then we get out. That could happen, something like that. But it looks to me like we're on the way down. Like this is the everything bubble blow off top. And I think the only real model for this kind of drawdown that I can find in the stock market history is the Dow Jones from the top of the Great Depression blow off top. The Great Depression had a 3-month blow off top just like this. It was down, 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 1, 2, 3 months, like right off the top of the Great Depression blow off. So I mean, this is basically a model of that same Great Depression blow off top right here. And then if we go out a little bit farther, let's see. Here's our little bit longer term bear market that I think we're getting into. So I think that we are going to do a 1, 2, 3 drop right here off the top of the everything bubble. And then that is the world monetary contraction. It's a 3-month contraction. And then after that, we're going to get a monetary expansion where everyone can get money again. And we're going to go wham. I think we're going to go V off the bottom here. And this is a 3-month bounce off the bottom for the next quarter. And then we start our 2 to 3 year bear market. So I have this out like 2023 somewhere, maybe like that. So this is going to be very different trading conditions if if everything you know is a 10-year bull market. So people don't know what to do right now because they've never seen a crash like this, and I just don't think people expect a 2 to 3 year bear market, but that's what I expect. And this drawdown here is probably where the housing market would bottom. A few years after the crash is about right for the housing to bottom. And that's going to be, I don't know the percentages. It's just a huge percentage of the stock market down though. And then I'm thinking probably gold would do really, really well during this bear market, and silver probably would draw down, and then silver would probably reverse up and catch up with gold at the end of this. So that's my long-term idea here, is to just invest short for a few years and then look for housing or silver at the end of this. Just a general idea. This is not investment advice for sure. Do not take advice from me. This is just one idea of what might happen, and it's just what I'm doing this week. Is, we just got this incredible back test and this consolidation, and I'm just looking for the next leg down here and trying to get short. So yeah, good luck out there. Happy trading.